Hello, Alex Peters. Can you believe it's already May?
No, it feels like it should be February 1st or something. The year is just flying by way too quickly.
How are you anyway? Are things good? How is the loan business at the moment?
It's good. Still staying busy. Seeing obviously more purchase volume happening compared to refinance volume. But part of the conversation we always have is how are rates doing, and they've actually dropped a little bit since our last conversation. And so refinances aren't gone completely. It's just less than maybe say 3 or 4 months ago. But purchase applications and volume is up a lot. So people are still hungry. There's still a ton of demand and a huge appetite for buying a house right now.
Yeah, so anyone who hasn't seen this before, we do a market update every month. Alex Peters talks about the interest rates and getting a loan. I talk about the purchase and selling side of things. And it's obviously been a completely mad year. Every single month we talk about, what we predict is going to happen. We've now realized that we cannot predict anything really that's going to happen because it's just been completely insane. Every single month, I'm thinking, is there going to be much change? And right now, that as you say, that there isn't a dramatic change. I think people are kind of getting used to this market now, and I think a lot of buyers that were putting off buying are now getting worried that, okay, maybe there isn't going to be the drop that everyone thought there was going to be. So now they're coming into the market, and whilst a few more homes maybe have come on the market, the level of buyers have come in as well. So it's still very much 20 offers on most homes, well over asking price. You've got to be ultra competitive in order to win a home. We thought that interest rates were going to continue to rise, so that's really interesting that they've dropped a little bit. So what are you getting now on the different loan packages? What interest rates can you get?
Yeah, so last month we spoke, we speak every month about all the products. So looking at VA and FHA, last month we spoke, it was 275. It's still 275 for those two products, but the amount of credit we can give at those rates is significantly higher. And then 2.5% is within reach, meaning if we get even a small amount of improvement, we'll be at 2.5% again. So month over month, they're pretty much flat. However, the amount of a credit we can give and the distance between 275 and 2.5 has shortened quite a bit. On conventional, that's where we have seen a good change. So last month we were about 3.375 all the way up to 3.75, depending on credit and property type, location, etc. Now it's about 3 1/8 up to 3.625. There might even be a circumstance with good equity on a single family home where you might be able to get 3% or 2.99. Just depends again. And then jumbo loans, they were about 3.3 to 3.7 last month. They haven't changed much. It's still 3.25, maybe 3.125 if you're that extra special, good down payment, single family home, that kind of thing. So about 1/4% on conventional. FHA and VA hasn't changed too much other than the amount of credit we can give at the same rate, and the distance to 2.5 has shortened quite a bit too.
And one thing which is a massive change for me as a real estate agent is you can now close quicker as well, which is fantastic. Because before, obviously everyone was doing so many refinances that it was just impossible to close in less than 30 days. It was just really tough. Now, I'm chatting to you and we're able to write offers, 21 days, 24 days, for example, depending on the product and the situation. So is that generally standard now that you can close in much quicker time?
Yeah, I can't really speak for other lenders. Every lender has different processes and whatnot, but we're seeing our pipelines being freed up from refinances, which take longer anyways. And my team specifically has always focused primarily on purchase loans, but we've tweaked a few things in our system that allow us to close 21 days or less on a conventional FHA VA loan. If it's a jumbo, those do take a little bit longer because there's a second level investor review that's required. So we're saying 25 days or less on those. But for one thing that we're doing for all our clients that go through the full pre-approval process with us is we're able to waive the loan contingency in most cases, unless it's a very difficult situation that has a lot of moving parts. And what that does is, I'm sure you know as an agent, but for the consumers out there, it basically you're allowing the agent to present an offer as if it's cash. Even though there's a mortgage attached, what you're saying is we're not worried about the loan. It's already been vetted out. We already have an approval. So our offer is as good as cash, and we're not going to cancel as a result of the loan. So it's helping my clients get much more competitive advantage in getting their offers accepted. We've been doing that maybe for about a week or so now. Previously, we were doing about a 10-day loan contingency, which is still quite short. But for the right clients, we're able to waive that.
Do you know what? That is absolutely massive. And it's something which is a game changer. You know, I was writing offers with a client of mine, and we were doing it, and you know, there was an element of risk there, but now you could, you know, beforehand, but now you can do that and remove that. That's great, because the truth is you're going against often cash offers. You're going to have to if you really want to get a place, you're more than likely going to have to remove the loan contingency and the appraisal. And this is what's happening 99%, I'd say, percent of the time, is people are removing their appraisal contingency, and it may not appraise. Now, say for example, the house is valued at, I don't know, listed at 999, and you manage to get it at 1.1. The house might only appraise at 1050 or 1075. You then have to pay that difference. And what they're doing is they're making sure that people understand that it probably will appraise lower. Have you got the funds to cover that difference? So if you're looking to buy a house right now, you have to go into it knowing that not only have you got to have the 20% down or whatever it is that you feel comfortable putting down, but you best having that extra money in your back pocket as well to potentially cover the appraisal. Now, that is where working with a good real estate agent is key, because I'm pretty good at working out what I feel it will appraise at. And so, you know, I'll be honest with you and say, I think this is going to appraise lower. This is what you'll probably have to pay on top. Now, you know, sometimes there are random things that come up, and then there are ways that we can work through that. You can ask for them to look at it, etc. as well. But I mean, I just had a couple of deals where I was worried about the appraisal, and it came through. And I think when we first, you know, this time last year, even up to August, September, October, appraisals were coming in very low. I think now most appraisers are looking at it, they understand the real estate market, and they're looking at it going, do you know what? They got 10 offers, 20 offers. The house down the road sold for a ridiculous amount. And generally appraisals are coming in from what I'm seeing, but you still, just in case, got to make sure that you have got those extra funds. And then in regards to the inspection contingency, most of the time you're going to have to waive that as well. And so what I'm often saying is still get the inspection done to make sure. And what I'm often doing is saying, look, we don't mind removing the inspection contingency. You normally have a couple of days to put in your money. So why not get the inspection booked for the day after, get the inspection done before you put your deposit in. So there's little tricks of the trade that you can do. And then if there's anything major that comes up, you can pull out of the deal without losing your deposit. So there are little things that you could do. I mean, I've even done it before where, you know, we kind of knew the loan was going to be okay, but we just wanted just a few days. And we were like, I think the appraisal is going to be good. So we asked for a 7-day inspection period, and we got the loan approved and the appraisal done within that time, and everything was fine. So there are some tricks to the trade that you can do that your standard real estate agent may not do. So just make sure you find someone that's experienced. And yeah, the key thing is to get the loan already good to go. You've got to, if you're thinking of buying a house right now, speak to Alex. Don't get the pre-approval from the bank that they haven't even looked at anything. We see it all the time, don't we, Alex, where they say they're pre-approved, I hand them over to you, and they say, what have you given the bank? And they were like, well, I haven't given them anything. I just told them how much I earn. It's not that simple.
No.
So in regards to a pre-approval, you know, like a proper, let's get you qualified, let's make sure you're good to go. What are people generally going to have to give to you?
So an online application, so we run the credit, that credit report is then good for 120 days, which is 4 months. A one-time credit check is not going to negatively impact your credit, especially from a mortgage lender. And then if it's for a regular person who's employed by a company, we just see the most recent pay stubs to cover the last 30 days, so that's usually 2. Most recent bank statements to cover the last 60 days, so 2 months. An ID, W-2s for the last 2 years. And if you are strictly a W-2 employee, that would be it. We wouldn't need your tax returns. But if you get additional sources of income, maybe your wife is self-employed, then we need 2 years of tax returns in addition to everything else I just said. And then if you're a corporation, then we need the business tax returns too. So it's really not cumbersome. It's some pay stubs, bank statements, W-2s, an ID, and then potentially tax returns as well. Pretty straightforward. We just need 2 days after we receive everything to complete our pre-approval process. And when we do that pre-approval process, we are vetting it out completely, checking all the guidelines, all the different programs that you're available for, including first-time homebuyer programs, and then having underwriting review the pertinent documentation that was supplied to us. From there, we can then issue the approval, and we'll know exactly what the conditions are. Every approval has a condition to it, so it could be explaining some additional address that's shown up on your credit report. What is the address for? Why is there a big deposit for 10,000 bucks? Could just be your IRS refund or whatever. So that every approval comes out with conditions, but as long as we know what those are going into the offer and we can meet all of those, we'll have no issues. And one thing I would say that we've been talking about with our clients is, because the market is so hot, if we max you out at 550,000, maybe you should be looking at homes around 500,000 or 450,000 so that you have room to go up. And if you're maxing out on your down payment, it's probably not the best idea. You might want to peel that back a little bit or see if you have access to additional funds, because of the whole waiving appraisals and needing the additional funds to come in to cover the difference. And the one thing I did want to comment on is some clients I've spoken with recently, they're like, well, if it's not appraising, then it's not worth it, right? And I disagree entirely. An appraisal is based off of sales comps, as we call them, comparables. So homes that have already sold. And if you're setting new records for the neighborhood, you're in a market that's continuing to appreciate, and you're the newest one, it doesn't mean that you're not getting the value for a home, because you could turn around and sell it. And if, as long as there's a buyer for that sales price, then technically it meets the value. You're just getting one person's opinion, which is arbitrarily having to go to the guidelines on how they value a home. And they may be saying it's less than what the other homes are compared to. But unless it, if it's 10,000 bucks, 20,000 bucks here and there, I would not get dismayed whatsoever. Well, if it's the appraisal value is 200K off, it might be something to consider.
Yeah, I had one. The appraiser called me and he said, I don't see how we can do this. He said the last sale in this area was at this price. And I was like, yeah, that was 2 years ago. Right. And I said, it was a house in Southern Carlsbad in La Costa. And I was just like, look, you're just picking this area because the reason why nothing has sold is because it's so valuable. No one wants to move there. It's such a great area. If you just use this comp, this comp, this comp, this comp, this comp, all ones that we've written offers for, and I had to say to him, look, this one's pending at this price, this one's pending at this price, and I know because we wrote this offer at this price and they didn't accept it. And so, yeah, it's one of those that sometimes something appraises because, yeah, maybe something hasn't sold in that particular area, but I'm telling you now, if it did, it would sell at a really high price. And then the other thing to mention is sometimes, you should use an agent that's honest with you and tell you whether it's a good purchase or not, and then you have to make that decision. I will say to my clients sometimes, the truth is this house is not worth more than 1.5 million. It's just not. Anything you're paying over, you're not going to, you're paying over what I feel it is worth. Whatever it appraises for is one thing. I don't think this house is worth that right now. But then some people are like, this is my forever home. It's my favorite home that I've seen out of the 100 that I've seen. I don't care. This is what you're against quite a lot of the time, is people go, I won't pay that. It's not worth that. You're right, it's not worth that. But to someone else, it is, because they don't really care that it's not worth it. They've lost out on 100 homes. This is the best one that they've seen. They're fed up with the process and they'll pay it. So that's why keep open conversation with us. If anyone is looking to move, the first thing you really should do is speak to Alex. Find out exactly what your monthly payments are going to be with the interest rate as it is right now. Things may change tomorrow. And then find out how much deposit it is. Speak to him. If you're thinking about getting some money from a parent, and you don't know how much to borrow and all of that, speak to Alex. He'll tell you about when to get that money, how to put that money in. There are restrictions. You can't just get cash from them. and just at the last minute and pay it in. There's certain things that you've got to do. So speak to Alex now, and then speak to me, and we'll go and look at some homes.
Sounds good. You know how to contact me. If you want to text me or call me, 760-224-5510. My NMLS number is 1359656, since that is a solicitation. But feel free to reach out. We can get you pre-approved, discuss all the numbers that you want. One other thing I did want to mention is, if you still believe we're in a rising rate environment, which a lot of people do, we do have the lock and shop program, where we can lock your interest rate in now while you're shopping, and then you're not worried about rates rising. And if they do go lower, before you get into a house, we can take advantage of the lower rate as well.
Awesome. Brilliant. Thank you very much for your time, Alex.
Thanks, James. Thanks for having me on. Have a great day.